Ladies and gentlemen, hello and welcome to our web conference today. This is Fast Track Dynamics 365 for Finance and Operations Tech Talk. Today's topic, GST and GTE Part 3, Extending GTE. My name is Janice and I'm going to be your moderator today. We are broadcasting this web conference through Teams live events and the audio can be heard through your PC speakers. Today's web conference is being recorded on behalf of the Microsoft Corporation. Participation in the meeting today indicates your consent to being included in the meeting recording. Attendees may access the web conference recording via the same registration link that was used to attend today's live broadcast. If you have questions for the presenters or need support, you can turn on the Q&A panel by selecting the question mark icon located in the upper right-hand corner of your screen. We do have presenters standing by to respond to your questions throughout the session. Now, on to the presentation. Presenting for us today from Microsoft, we have Senior PM Lead Richard Luan, and supporting Richard on Q&A is Senior Program Manager Pravat Bhargava. So without any further delay, Richard, welcome and thanks for joining us.
Okay, so this is the second session about GTE. So in our Wednesday session, I introduced you what a GTE is about. Basically, it is a global tax engine, and it is a configurable tax engine in area of tax applicability, calculation, and posting. So since it's a configurable engine, it is possible for our customer partner to extend the configuration to fulfill some other non-supported scenario in a standard Microsoft configuration. So today, I'm going to show you two extension scenario, which one is anti-dumping duty, another is SEJ. So basically, by demo this two session, I'm going to show you how to add a new task component and how to change the existing component for tax applicability and posting, and also calculation. So first, anti-dumping duty. So anti-dumping duty basically is a special custom duty which is levied on a certain product, and it is calculated by unit. So basically, it's not like standard or normal tax code, which is normally calculated by the net amount. It is calculated per unit. And so we have the business requirement. Then from our GTE perspective, we need to analysis the requirements, the impact to the X++ part and the configuration part. So basically we just need to add a new task component to the standard GST configuration. We don't need to change any UI in finance and operation. So there's no X++ change. From configuration perspective, we need to add a new task component for this anti-dumping duty. And since it's a customer duty, so we should add it under the customer duty tax type. And we need to make sure that the tax is calculated per unit, not by the net amount, or Indian, it is by the assessable value. And from the applicability perspective, it's not applicable for all the import-export order. It is only applicable for certain item. So basically, that is a way to analyze the business requirement from GTE perspective. Then let me move to the finance and operation to show you how to extend the configuration. So let me first try to create an import order. So now I'm using the standard GST configuration in this environment. And let me try to create an import order. So I mark it as the import order, which is Indian localization feature. Let me choose another one. Save. So by clicking tax document, wait a second, there's so I need to, I need to change the tax information to make sure there's IEC number. So I specify the custom tariff code. Okay, so now we have, oh, wait a second. Sorry, I need to switch back to the standard configuration. Let me go to tax setup. So because in this environment, I enabled several other configuration which actually support anti-dumping duty. So now I activate the standard configuration. So I go back to the tax doc purchase import order. So I click recalculate. So as you can see, we have customer duty and IGST. There's no anti-dumping. So next, I'm going to show you how to extend the standard configuration by adding this new tax component. So I'm going to electronic reporting workspace. So I hope you still remember that if you want to change the behavior, the first thing you need to do is add a new configuration provider for your organization. Suppose it is Contoso. It's a kind of workspace, so I set it, make it active. Let me refresh. Second. Oh, let me check. Configuration provider is okay, it's changed. Let me double check. Okay, I just make the Contoso this configuration provider is as the active configuration provider. So I go to tax configuration. And so as I explained in my last session, when you try to extend the configuration, the first question you need to answer is whether you need to extend the taxable document or you just need to extend the tax document. So taxable document is a data model and it contains all the fields which are needed for tax document. So basically all the fields which are needed for either tax applicability calculation and posting. So we are just trying to add a new component and it is applicable for certain item. So from applicability perspective, we need a field which is probably item ID, and since it's calculated per unit, we also need a field like unit, so user can specify different tax amount per different unit. So let's first check whether we have this field in the taxable document. So we click the designer of the taxable document Indian to check what we have in this taxable document. So we go to line to see whether we have like item ID, so we can make the anti-dumping duty only applicable for certain item. So as you can see, we have item ID here. And let me check the unit. So actually you can search instead of looking for it. So let me check. No. Okay, we have this unit. So basically we have all the field to support this new tax component. So that means we don't need to touch the taxable document. So the only thing is we just need to extend the tax Indian GST, which is a tax document. So we click create a configuration. There are two options. We don't want to create a new taxable document. Instead, we just want to create a tax configuration derived from the standard Microsoft tax document. So give it a name. Okay, so we have this new tax document created. The status is in draft status. And then I click designer. So according to our analysis, anti-dumping duty is a special kind of customer duty. So in a standard configuration, we have two tax types, customer duty and GST. So we should add a new tax component under customer duty. So I select customer duty and then I click add a button. There's only one option for me to choose, which is tax component. So I just want to add a new tax component. So I give it a name, anti-dumping. So I use the same description. I click OK. Okay, so according to the flow chart I shared in my last session, I add a tax component. The next thing I need to do is I need to determine what kind of the tax measure are needed in order to do the tax calculation and posting. So I select this tax component. So I can add a tax measure. So tax measures are something like tax rate, base amount, tax amount, load on inventory amount. So basically these are the building block for the tax formula and the posting. So I select tax measure. And the first question you need to answer yourself is you first need to check whether there are existing measures which can be used directly instead of you creating new tax measures. So if you click this button, you can see all the existing measures in the system. So you click base amount, definitely you need a base amount, and you need a rate, and also you need a tax amount. So it is a multi-selection. I just select the three measures. So I click select button, and I click OK. Okay, so we have three measures. That's basically okay to support the this anti-dumping scenario. And since this anti-dumping is calculated per unit, so we need to modify the tax rate a little bit. So tax rate is a little bit different from the other tax rate is a little bit from the other tax measure. It's actually a composite measure. So you can have, so that's the reason you can see it is a tree structure. So we have a rate, and under it there is a rate, another rate. So this represents the normal, tax rate percentage. So actually I can add one more sub measure here. So I click add button. I can say it is a tax value, which means the tax amount per unit. So here are two types. I need to choose the factor instead of the rate because it's tax amount per unit. So I choose factor. I click OK. So I save. So until now, I add a tax component with some tax measures. So the next thing I need to do is I need to decide the applicability rule for this new tax component. As we just analyzed, anti-dumping duty is only applicable for certain products. So we should highlight the tax component and then go to lookups. So as I explained in my last session, there were two ways to configure the applicability rule. One is you can write some condition in the tax component level. Basically, it means it's kind of hard code. It's a static rule which can be used for in all the customer's environment. And we can also configure lookups. So it's similar as a condition, but there are two options here. One is configuration. In case it is configuration, means the rule is also static. So it's logically it's the same as you do in the condition, but it's different way to configure the applicability rule. Okay, but in our story, anti-dumping duty is for certain products, certain items. So we need to use the data in the user defined in the finance and operation. So that's the reason we should choose the source type as the user data. But let's first choose the correct column to determine whether anti-dumping duty is applicable or not. So, and according to our analysis, we want to use item ID to determine whether it's applicable or not. So I select item ID, I click this button, I click OK, and we need to make sure the source type is user data, so I can set up the applicability rule in the finance and operation instead of in the configuration. So I save it. So we are done for the applicability. And one more thing, we also need to decide how the tax rate is determined. So because anti-dumping duty is calculated per unit, so probably there is different tax value per different unit of measure. So it's a good idea probably to add a column for unit, so user can specify different tax value for based on different unit. So again, I click these columns. I pick up the unit. So again, actually can search. I can search. Okay. So basically, I'm done with the applicability for both tax component and tax rate. So next thing we should do is for tax calculation. We need to decide how the tax is calculated for this tax component. So again, we should go back to the tax component, and we have this formula tab. So in here, we can configure the calculation logic. So you can have a set of formulas. So I just added the first formula and click this button. So since it's a task calculated per unit, so the base amount equals quantity. So it doesn't like the other task component which calculate per net amount or accessible value, where you write your formula like base amount equal accessible value or a net amount in other country. Instead, we should the base amount should equal quantity. So we have the base amount, then we write formula for tax amount. Tax amount equals base amount times tax value. You click save. If you want, you can try to test it. So this is the anti-dumping base amount. Yeah, so I can say, okay, suppose the quantity is 5. And what is tax amount? Yeah, tax value. Suppose that the tax value for a unit like EA or pieces is, for example, is 10 rupee, and I click OK. So you can see the result. The quantity is 5, and the tax per unit is 10. So that's the reason we can see the tax amount is 50. And of course, quantity is 5, right? So that's correct. So let's click OK. And we give it a name. So because this formula is basically can be applied for all kinds of transactions, no matter it's import order or export order. So I don't need to change the condition here. So again, let's save it. So we're done for the applicability and also for the calculation. So almost the last thing is the posting. So how you want to post, do the tax posting. So again, we have a similar UI as the formula. We add a posting profile. And since it's a customer duty, the posting logic is the same for import-export order. So I can first give a description, import-export order. And then I don't need to write any condition here. Instead, I go directly to the Detail Fast tab. I choose the measure I'm going to do the posting. Definitely, I will post the tax amount. So I select this tax amount. So we have debit side, credit side. So I need to select the tax expense. So debit tax expense and credit tax payable. So again, when you configure the posting profile, the first thing you need to check whether there are existing tax account which can be used directly for your scenario. If not, you need to add the new tax account. We will cover that in the SEJ scenario. I'm going to show you how to do that later. So let's first complete this scenario. So I choose tax payable. So debit to tax expense and credit to tax payable. Okay. Again, I save it first. So yeah, so we have applicability, calculation, and posting. And the last thing I need to do for this component is how you want to manage the accounts for this new task component. So to keep it consistent with other task component under customer duty, I choose two column here, import order and export order, which means you can maintain different set of accounts for import order or export order. So I click save. Okay. Okay, we're almost done for the anti-dumping duty. One last thing is now is really the last thing, because for import order we have both. Actually, we have both customer duty and anti-dumping. So actually, in that case, IGST will be calculated on top of customer duty, including all the customer duties like a BCD, SWS, anti-dumping duty. So we also need to change the formula for IGST. Let's go back to, yeah. So if you go to IGST formula to check the formula for base amount of IGST, you will notice that the base amount of IGST equal line base amount plus BCD tax amount plus SWS tax amount. So definitely we need to consider this new customer duty. So we should go here and plus anti-dumping tax amount. Click save. Okay. Okay, so that's all for anti-dumping. Let's complete it. Okay, so before I move on to next scenario, let me actually try to test this new configuration. So you should go to tax setup, and I have already created a solution which named GST, and there are synchronized configuration. So what I need to do to deploy this new configuration into this finance operation is I need to click the new button. And from here, you can see all the completed configuration in this environment. So I should choose tax control. I click save, and I click synchronize. So when you create a click synchronize, basically it will do two things. One is it will deploy the configuration into the finance and operations, so you can use this configuration for all the taxable transaction. And beside that, for each configuration you have tax setup, which are used to determine the tax rate and the account setup. So all this setup we call it tax setup. So we have the option for you to decide whether you want to copy the existing tax setup from other existing configuration. So I would like to copy from let's copy from this Microsoft standard configuration, which means this 228. I click OK. So it is error message tell you that you are going to delete the configuration setup. So and replace it with the configuration of the 224 setup data. Do you want to continue? Yeah, I'm going to click OK. It will take some time because there's a lot of setup in the original configuration, and the system will also do some validation. So I have this deployed synchronized configuration, but the status is still available. I need to activate it. Okay, and then I need to go to tax setup. So please notice that there is actually a drop-down list on top. You can, although this is the current active configuration, but still you can switch to other configuration to view the tax setup data. So the first thing you notice is under the customer duty, we have a new tax component available here. So if I go back to the standard configuration, so you can see there's only BCD SWS under the customer duty tax type. But now let's go back to tax control, which is extended configuration. We have this additional component. So I select this one. The first thing I need to do is I need to add a setup here. So I click item. No, I just make it 1105. You click save. Okay, there is a minor issue here. Actually, we shouldn't have so many dummy row. And yeah, this is applicability. I need to also select the period. So I use, let me take a reference of existing component. Okay, so I think let's use, customer settlement. So because just like the standard tax engine, sales tax code, period is a mandatory field. So you must select the period for each tax component so you can do the settlement in a later afterward. So I select the period for it. I configure the item ID for this anti-dumping duty, which means it is applicable only for this specific item. Okay, and actually, you notice we have accounting tab here. You can specify what are the accounts for import order, export order. But since I already configure the account in the customer duty level, and I would like all these components use the same set of accounts, so I don't want to add a more account here. But of course, if you want the system use different account for this anti-dumping duty, you can definitely do it. So you click, for example, you can say, okay, for export order, and I want to use a different account for tax payable, tax expense from, compared to the general, main account I maintain in the tax type level. So, but anyway, I don't want to do it right now. So just to keep it simple. Okay, I save it. Okay, let's go back to anti-dumping, right? Let's go back to this import order. So we have this 1105, which is actually applicable according to this setting. Let's click tax document. So as you can see, for now, there is still BCD SWS, but if I click recalculate, I hope I can see this anti-dumping duty. Okay, that's great. So we can see anti-dumping duty here. Let's check the tax amount. Oh, we have base amount 1, but the rate is 0. Okay, so definitely the tax amount is also 0. So we forgot one thing. We need to maintain the tax rate. Okay, I say for this unit of measure, the tax value is, let's say 10. Click save. Now I click recalculate again. Okay, so we have this base amount which equals quantity. We have this tax value. The tax amount is 10, and also let's check the base amount of IGST. Let's select the line. Okay, let's use calculator. So let's try to compute. So the base amount for BCD is 1180817. So the IGST should equals to like this. Also, IGST customer duty. Oh, wait a second, not this one. Should be the line base amount and plus the BCD, which is 1,181, and the SWS, which is 59.08 plus 59.8, and plus yeah, let me check again. Looks a little bit strange. Base amount. $59.08 and 10. Okay. Yeah. So yeah, as you can see, the base amount of IGST equals to the line base amount plus BCD plus SWS plus anti-dumping duty we just added. So it looks correct. Okay. So basically that's all for this first scenario. I'm not going to post it because all the rest is the same. So let's go. Let me go back to the slides. Next one is a little bit different. This is SEJ. So we know in India we have a special economic zone. Basically, actually, it's a in other countries we also have this concept actually. So primary objective is to develop the export scenario in India, by attracting more foreign investment and offering an international competitive market. So basically, the SEJ is a duty-free geographic regions, and the economic laws are different from a country's conventional economic laws. From a tax perspective, there were two things we need to consider. The first one, it requires separate registration for SEZ unit under GST law. So that means for business, if for certain state, I suppose for a certain state, you have business inside the SEZ and outside SEZ within the same state, you are still required to register twice, one in the area outside of SEZ, and another is within the SEZ. Another thing is there were two ways to make supply to SEZ. So one is you make the supply with payment of IGST. The posting will be like this. You have so the first line is account receivable. Unlike the normal sales, you will debit to a IGST refundable account instead of tax recoverable account. And of course, this is sales account, and the last one is the same as a normal sales, which is IGST payable. So basically, the special thing for selling to SEZ is you should debit to a special account, which it called IGST refundable account. And of course, there is another method. You can do supply without payment of IGST. Then actually there is no GST applicable in this case. So basically, this is a business requirement. So back to GTE story. So what is the impact to finance and operation, and what is the impact to our GST configuration? So again, firstly, we need to check whether there's any X++ impact. So the first requirement is user or business should have a separate registration in SEZ area. So we need to add an option to customer or vendor's address to indicate whether this address is within SEZ. So we need some UI changes in the customer vendor address or other places according to. It's possible you add this change in the in the enterprise registration number master. That is also acceptable. And also another change is we have two ways to make sales to SEZ. So we need to add an option for you to decide whether you want to make a sales to SEZ with payment or without IGST payment. So we also need to add an option to sales or purchase. Dialog box or form to let the user to decide which way he want to make supply to SEZ. But good thing is if you do it in the round 1 version, I mean 10+ version, we have already provided this UI change. You don't have to do anything for the UI. So that means in round 1 version there is no impact in X++. So then we come to the configuration impact. Oh, sorry, I think there is some issue here. I think I'm really sorry. Let me check. Okay, I think there is some issue, but let me try to. Sorry. So the configuration impact is firstly, make sure, let me do it right now. Make sure IGST is applicable, right? For sales to SEJ, right? So make sure IGST is applicable for sales SEJ, even the ship from state is the same as ship to state. Okay, because by default, if it's an intrastate supplier, it is CGST plus SGST. So this is the first thing we need to do, and make sure make sure the IGST debit to tax refundable account instead of the tax recoverable amount account, right? Actually, basically that's all. So since yeah, so this another part. Sorry, I think I should divide it into two parts actually. So taxable document, right? Taxable document, right? So for taxable document, you need to add two fields to add two fields for SEJ, sorry, SEJ party and with IGST payment. So since we need to add option in the finance operation, so and these two fields will affect the tax logic we maintain in the tax document. So definitely we need to add this additional field for this two additional field in the taxable document. And then we have this wait a second, tax document, and from tax document we need to do following two things. Okay, so let me, yeah, okay, so let's go to financial operation. Okay, so the first thing I need to add two more field. So that means I need to extend the taxable document. So I select this taxable document Indian. I click configuration. I want to derive. I create a taxable document model derived from taxable document Indian Microsoft. So I give it a name. Before I change the configuration, let me try to show you the UI change. I mean for this two option. So let's go to customers. So I'm in the round one version. So if you go to the customer or vendor master and go to the address and I click advanced, and in the general tab, we have this EPT code. There are several options there. But for now, let's just select SEJ, which means we have the tax registration on this address is SEJ registration. I click save. Now, if I create a sales order, so I select that customer, and please notice that we have this with tax payment. So of course, if you choose with tax payment, that means you want to, in case it is a sales to SEJ, you choose the with tax payment method. Of course, you can choose without tax payment to uncheck it. So let's choose with tax payment. So I select the site and warehouse. I click OK. 1104, save. So let's open the tax information. So actually, I don't need to change anything. That is also a benefit that GTE can bring to the customer, because basically you don't need to enter additional field when you create a sales transaction or purchase transaction. It is fully automated process that GTE will decide what is the correct tax type or tax component or tax rate is applicable for this transaction. But I'm opening this tax information for you to notice that we have an additional parameter here called SEJ. In case the customer address, the EPC code for this address is SEJ, then this will be defaulted as yes. So I cancel it and I click Sell button and open the tax document. Okay, so this is CGST and SGST. Why? Because it is inter state transaction. So actually, you can get it from the input view tax input. So yeah, this is one thing I can highlight here. So if you select the header, you click view tax input. This is the input to GTE, so you can check what are the field value which sent to GTE for tax calculation and posting and applicability. So let's select a line. So from here you can see there's an intrastate. Service category. Oh, okay. It's at the top. Yeah, so it's not an interstate because it's why? Because we can actually find the state. Yeah, city of origin is Bangalore, and the consumption city is also Bangalore. So that's the reason it is not an interstate transaction, right? So that's the reason we can see there are CGST plus SGST for this transaction, and yeah, so that's basically the normal sales transaction. Although the address is SEJ, but actually still it is from GT's perspective, it is still CGST and SGST for this transaction because we haven't changed the configuration. So let's change the configuration to support this scenario. I just create a taxable document contoso. Again, the status, the initial state status is draft. I click designer. So again, it's a tree structure. You should decide which level you want to add this new field. Actually, we want to add two more fields. One is SEJ. So whether the customer or vendor is SEJ. Another one is with IGST payment. So we should add let's first select the header, and we add a field called IGST payment, and you need to choose the correct item type. So with IGST payment is actually is an enumeration. So there are two options, yes or no. So I choose the value as enum. So add it. So since it is enumeration, so you can select item reference to assign a reference model to this new field. So I assign a no, yes, which is enumeration with two options. One is yes, another is no. I click OK. Okay, and then I still need to add one more field, which is SEJ. I select a line because SEJ is defined in the address level, so it is theoretically it's possible that for the first line, the address is SEJ. For the second line is not SEJ. But of course, from real business perspective, it's not the case. But let's follow the design. So I select the line, and again, I want a field called SEJ party, either customer or vendor. So again, the type is also enumeration. So I click add button. So again, it's an enumeration. I need to assign a reference model to it. So still, I'm trying here. I just want to remind you the reason why we have this reference model. So reference model is for you to easier for example, suppose this field will be used in the text setup. You don't want to specify or in the configuration. I mean, in the lookups, you don't want to type the correct value for this field. If you want to use a drop-down list to pick up the correct value, so you should assign the reference model to this field. Okay, so that's a reason we have this concept of reference model. So I click save. Okay, so then okay, we have this model, but we also need to do model mapping to get the value from the financial operation, from the transaction you're going to create in the financial operation and the data model. So we click this map model to data source. So there's a lot of model mapping per each transaction type. So let's focus on the sales transaction. So I click sales order. I click designer. So I just want to show not mapped only field. So on the right side, I can see we have this with GST payment, and I want to map to sales order with GST payment. So I bind it. Okay, and then we have lines. We have this SEJ party in the lines. In the model line, we also have this field we just added. Okay, save. And sales order, we also need to do it for sales order palm. SEJ party. Please note that actually, so in the data source, we have this field, and actually you notice that the name of this field in the data source is exactly the same as the field name I added into the data model. So for AX 2012 R3 environment, so there is no concept of model mapping. So in that environment, you should write X++ code to set the value to the data source. But you should make sure that the value field, the field name in the X++ code is the same as you define in the model, just like what you can see here. Okay. Let me bind it. Okay. So I just done model mapping for sales order and sales order palm. Yes, that's all for sales. Let's save it. And save it again before I close it. So I need to complete it in order to use it in the tax document SEJ. Click OK. Okay, so we have a completed taxable document. I go back to this extended tax document I created for anti-dumping duty, and I click Designer. So because I just extend the taxable document, and definitely you want to use that taxable document for this tax document. Because the only reason we add a SEJ party with IGST payment, this additional two field, because we want to use this field to determine, to configure the tax rules like applicability, posting, calculation in a tax document. So you need to make sure that in your extended tax document, it use that model, use that taxable document it just created. So if you select the tax document, this node, in this property tab, there are two fields you should pay attention to. One is data model. So by default, as you can see, the data model is the standard data model, standard taxable document provided by Microsoft. So you should switch the data model, or you will not be able to see that additional field you created. So I choose this taxable document contoso, and you need to choose the correct version. So there is just one completed version for that taxable document. So I choose this one, this version one. That action will refresh the tax document with the new data source. You want to continue? I click OK. So by click OK, system will replace the data model for this tax document. So it will do some validation to make sure that all the fields the tax document depends on exist in this new data model. So for example, suppose that GST, like anti-dumping duty we just created, we say, okay, its applicability is determined by the item ID. So definitely when I change the data model, I need to make sure that there is item ID in this new data model. So I just switch the data model. I click OK, save. I hope you still remember that for tax documents, we just need to change basically two things. One is we need to make sure it is IGST for sales to SEZ area, even is within the same state as the ship from state. And also, there was special posting logic for supply to SEZ. So let's go to GST. Checks checks applicability logic here. So there's nothing. So it's just to make sure it's not a non-GST. And if we check the lookups, so we have some lookup here. So basically, I'm not sure whether you know that the lookups here we have several rows, and the relationship between each of these rows is OR. So that means either you satisfy the first row or the second row or the third row, then GST, this tax type will be applicable. Okay, so take the first row as example. It means tax direction is sales tax receivable, which means it is a purchase transaction. So for purchase transaction, the company should be a regular taxpayer, shouldn't be a compensation scheme. And the customer should have GST registration number. So you are not purchasing from a normal customer. You should purchase from a business, and it's not exempt. So that's the meaning of the first row. So actually, we don't need to change anything for this GST tax type level. So let's go to CGST. So again, for CGST, we also have condition, we also have lookups. So if you check the lookup, it means the meaning is very straightforward. It means CGST is not applicable for interstate and import order. So that means, or we put it another way. So that means it shouldn't be an interstate transaction, and also it shouldn't be an import order. But so we definitely need to change something here, right? Because if you create a sales transaction to SEZ within the same state, then it means it is not an import order and it's not an interstate. Then system will show CGST as you just see right in this cells, right? So we should change it, right? So we should add one more column actually. We should consider whether the customer vendor is a SEJ party, right? So I add this column here. So it means it shouldn't be an interstate, shouldn't be an import order, and it shouldn't be a SEJ party. Right? So that means you are not selling or purchase from an SEJ customer or SEJ vendor. Right? So that's the change for CGST. And also, we should do the same for SGST. So yeah, back to the reference model. So as you can see, I didn't type no or yes, but I can select, right? Why we can select? Because behind this drop-down list is actually the reference model I attached to SEJ party. I added into the extended taxable document. So that's the reason why we have this concept, and that's the reason concept of reference model, and that's the reason I attached the reference model to the taxable document field. Again, I choose no. So by doing this, I just make sure that for sales to SEJ or purchase from SEJ, there is no CGST and SGST because it's always IGST for such transaction. So I go to, and finally I go to IGST. So I expect that IGST will be applicable for sales to SEJ. So I need to consider, right, if he's a SEJ party. And also we also need to consider with and without IGST payment, because in case user make the supply to SEJ without IGST payment, we don't expect that there is any GST component. So I select with IGST payment here. And also SEJ party. Okay, here. Okay. So according to the current lookup, it means IGST is applicable for in case it is interstate, but not an import order, or it is import order. So what we should do, we should add one more record here. We should say, okay, IGST is applicable for the transaction. The customer vendor is a SEJ party, and user should make it as a with IGST payment. Okay, I save it. So I just done the first part, change in the tax document, and then the final thing I need to do is to make sure that the posting is correct for sales to sales to SEJ party. So let's go to the posting profile. So we have a lot of posting profile for this IGST because it handles different scenario. And in Indian, for sales, you can see we have 3 different posting profile depending on this scrapping method, which is not available in other country. But definitely the first thing we should do is we should make sure that this posting profile will not be hit for sales to SEJ. So let's click the condition. So basically I just want to exclude this posting profile for sales to SEJ party. So it's a little bit complex condition, but from our side it's simple. We just make sure, okay, I put an and, I say, okay, SEJ party. So it means, okay, this posting profile is for normal sales, which is not for sales to SEJ party, SEJ. So I click save. So if you check the posting logic, so it will debit the payable amount to customer balance and credit to tax payable, but we want the system to debit the payable amount to tax refundable account. So we should exclude this posting profile for sales to SEJ. So I skipped this additional posting profile for sales, but definitely for complete solution, you should do the same for this sales invoice. And then we need to add one more posting profile. For sales to SEJ. So in this session, just showing to the configuration change for sales, but for the purchase, it's similar. So I can say, okay, I give a description to like sell supply. Let's say to SE. Okay. And then we need to write some condition because I want to make sure that this posting profile is only for sales to SEJ, not for other transactions. So we need to consider several conditions like SEJ party equals yes, and enable accounting is yes. And so basically for currently, you should make sure for all the formula, you should have this enable accounting equal yes. And also we need to make sure that the tax direction equals to sales tax. Oh, that's all. So, and then, okay, let's do the posting profile. So tax payable. Okay. Where is the tax payable? Oh, sorry, it's payable amount. Okay. So I wanted to debit the tax refundable account. So let's see whether there is tax refundable account. So we have bank account, customer account, but no tax refundable account. So I should type the account I want to post to refundable, tax refundable. So just click button tab. System will check whether there is such accounts in a configuration. So if there is no, so it asks you, do you want to create a new one? I click OK. So here is the name. You don't need to do anything here. You can give it a description, but which is optional. But pay attention to this tax accounting provider. We have a lot of accounting provider. So accounting provider means, as you can see, party. Party means it is either customer or vendor. Inventory means inventory. So we have tax. Tax means it's a tax account, which means you need to do some setup in the tax setup. So if I go to tax setup and select a GST, so these tax recoverable, tax payable, tax expense, these are all tax account. But if you choose if the posting type and its tax accounting provider is party, you don't need to specify anything for the setup because the engine know that for this certain customer, for this certain sales transaction or purchase transaction, what is the customer and what is the vendor, right? So you do not need to do any setup later. And also the same for inventory, but for tax account, for ledger account, you need to do some further setup to in this tax setup form to let the system know what exactly account you want a system to post to. So back to this tax refundable, the correct tax accounting provider is actually ledger. I can say either it's ledger or it's tax. Suppose it is ledger, which means okay. Oh, sorry. Hold on a second. So basically, what is the difference between tax and ledger? So if it's a tax, then it will impact the tax settlement process. But if it's a ledger, it is a pure, there is no impact to a tax module. It's a pure accounting. So this, right? We have tax trends, we have accounting system, we have tax module, right? So if there is impacts for tax reporting or settlement, you should make it as a tax accounting provider. If not, if it's just a pure accounting, there is only pure accounting impacts, you should use ledger. So for now, let's set as make it as a ledger, and I click OK. So I just add a new accounts and I decide to debit to this account and I credit to tax payable. There is existing account here. Okay, I click save. Okay, let me double check the posting profile and the sales order in the sales transaction. Yeah, enable accounting. Yeah, looks good. Okay. Yeah, so that's almost everything I need to do. Again, I change the status to complete. Okay, so again, let's go back to text setup. Click configuration. Click new. I can see there's one more version. Click the second version. Click save. Click synchronize. So this time I just want to copy the setup from the last configuration. So I click OK. Okay, this time it take a longer time. I click save and click activate. So let's click setup. Because I just add a new tax account, which is tax refundable account. So I need to do some further setup in here. So, okay. So as I explained, right, we have this, we added this tax refundable. The accounting provider is Ledger. So you need to do some further setup to specify what exactly account you want the system to post to. So I set it to 131190. Save. Okay, so let's go back to this sales to SEJ. So let's click tax document. And I click recalculate. Okay, so now the same sales transaction, but now I just click recalculate. You notice that it is IGST applicable, right? And if you check the view in tax input, you will notice that it's with IGST payment, right? And in the line level, we can check the SEJ party is yes. So let's do one testing. I go to header and uncheck the with payment. Now I check the tax document again. So click recalculate. So there is no GST applicable in this case, which is also expected. So let's check the with tax payment. Recalculate again. So we have this IGST, and let's confirm the sales order. And then I click invoice. So let's make it a complete scenario. Before I post it, let me double check the tax document in the invoice level. Okay, it's the same. Let's click OK. Okay, so invoice is posted. Let's check how it is posted. Let's check the voucher. Okay, great. You can see it is posted to IGST refundable account, which is 131190. I set it up in here, which is expected, and yes, it's debit to this account and credit to CGST payable. Of course, this is account name. Actually, it is IGST payable. Okay, so it can calculate correctly for sales to SEJ, and it can be posted correctly. So that's basically everything for the SEJ scenario. Okay, so we are almost done, but before I close my session, I want to mention one more thing. Yes, in the configuration. Okay. In round one version, I cannot, I cannot recall the details. Maybe in 10.0.2 or 3, we introduced this column, this skip model mapping. So the meaning of this skip model mapping is very straightforward. That means in case you didn't add any, you didn't extend the taxable document, and so that means you didn't do additional model mapping in your intended taxable document, or just in our case, so I click the designer. Or in the, for example, in the purchase order, purchase invoice. Okay, so in this data source, so for SEJ, for this with GST payment, we have this data source, and you also have the field in your model, and you can make sure that the field name is the same as the field name you have in this data source. So actually, you do not need to do any model mapping here. You just to, since the name is the same, and in the configuration, in this configuration, just make sure. Okay, I click edit. I can mark it as okay. I skip model mapping. So basically, by using this option, it can improve the performance, the calculation performance a little bit, and also system will do implicit mapping for field it defined in the model with the field we have in this special data source. If their name are the same, system will do the implicit mapping for you. So two benefits. One is you don't need to do additional mapping in model mapping, and another is performance improvements. Okay, and yeah, so. And I hope you know that for model mapping, we have two ways to do model mapping. So in case you can go to this, we have this docsmicrosoft.com, and in globalization, and in Indian, we have a session, tax engine overview. We have this end-to-end extension scenario based on UTGST. And inside of it, there is one session for you to understand the way to do model mapping. Okay. Yeah, we have two ways. One way is you do the mapping by taxable document data source. So basically, you need to write some method to get the value you want to have. For example, in our SEJ case, you need to write a method for SEJ party and a method for with IGST payment. So it's the same as a normal customization. You should know how to write such method to get any value from the transaction. And then you have this method. So in this case, it is whether it is intrastate with union territory. And then you need to write a specific method, which is specific for GTE. So you need to extend these classes and define the field name. Make sure this name is the same as the field you are going to add in the taxable document. And then last step, you need to call a special method. This line object set field name. This is the field name, and this is a method which is used to get the value from transaction. So that's the one way. Another way is a pure model mapping. This is the second way, which I just showed you in the SEJ scenario. So you can go the first way, and then in the text setup, and make sure that the data source, make sure this field name is the same as you have in the model, in the taxable document, and then in the tax setup, you can mark this option. So system will do the implicit mapping for you, and also there is some additional performance benefit. And so we still have some time. Maybe I can show you something more, which in a setup. So we know there is a lot of pain point in maintaining this rate table, because considering for some customer, they maintain a lot of item here. So for now, we provide this import export. So you can export the structure into Excel. And then you open this Excel, you do the rate tables preparation in this Excel, and then you can import from that Excel. So it will be easier for you to maintain this table in the Excel, and also easier for you to migrate between different environments. And later on, we are going to introduce some kind of rate type. Actually, in my environment, we already have it. So in a release product, in a release product or procurement category, you can assign a tax rate type, like here. So now it's empty. You can add something like high rate, standard rate. Standard. So lower rate, something like this. So you can assign the correct rate type to the release product or procurement category, and then for the setup you can change the configuration by using the rate type instead of this HS and SAC. So ideally, this table should be pretty small. Okay, so that's all for today's session. So thank you for listening. Back to Janice.
All right, thank you, Richard. All right, ladies and gentlemen, I'd like to take a brief moment here and bring your attention to a link that I posted in the Q&A panel. That is a link to a short survey for this web conference. We ask that you please take a moment before logging out to access it. We hope that you found today's information helpful, and if you enjoyed today's web conference, have feedback on how we can provide you with a better event, or you'd like to submit topics for future web conferences, this is your chance to let us know. We do appreciate the time you take to do this, and thank you for your support. And that is going to conclude today's web conference. The recording and a copy of the presentation deck will be available within 5 business days. Please look for an email from Learning Media that will include details on how to access those. I'd like to extend a big thank you to our presenter, Richard, and thank you, audience, for logging in and joining us today.